issue is about the new innovative financing modes for real estate and urban infrastructure. What do you think are the new avenues of financing which are emerging?
See, today when we look at the infrastructure as a sector and who are the contributors to infrastructure as a sector, okay, in terms of finances, the whole lot comes from government. That's number one. Who's contributing almost more than 50% of the allocations towards the infrastructure finance. And the next lot is the commercial banks. So if you look, almost 20-25% is contributed by commercial banks. And the balance 15% comes from the developers, like developers in FDI, it could be called the top 10 developers, whoever. So you find that 80% of the market is more or less held by these three people. And the balance 20% is actually available for maybe the insurance companies, the pension funds, and the NBFCs. NBFCs are currently holding around 10 to 12% of the market share. So looking at this, the kind of innovations that we expect is the change of the current market leaders who are there in that first system to these new entrants, the one who is holding only 20%.
Okay.
When we say that 80% is held by these people, means primary responsibilities are shouldered by these people. So when you say primary responsibility as a form of government, from budgetary allocations, so how do you replace them? That's the factor number one.
Okay.
How do you replace banks? The factor number two. Factor number three is how do you find an opportunity to make these developers who have taken enough amount of risk to venture into infra, to venture into some other infra, because they are already tied up with their hands. Right. So when we talk about innovative financing, we are nothing but we are going to unleash these three people and ask the next three people who are already in lines, maybe it's insurance funds, maybe it is pension funds, maybe it is the NBFCs, to take that larger chunk. So anything which is related to these two, we have to try. Now, what are the options that we have tried? The tried option is like whether we can offset some loans, refinancings. So whether NBFC can participate more in terms of where banks are already participating. So the bank's hands are unleashed. Second, whether you can fund the government. IISCL is a very best example which we already have today. So one more government body set up who could lend, who could borrow from the market, again lend to the government in whatever arrangement, so that the government is unleashed and it again has some allocation which can be parted again for the new infrastructure projects.
Okay.
So when we say about new or innovations in the finance, it is just change of partners. So the people who have already matured in the sector to the people who we want to mature. Now when we say people who want to mature, what is the reason that we want them to be in that sector? The reason is one, they have access to finance. That's the only reason. There cannot be any other reasons when we look at, okay, they have access to finance. So what form of finance do they have access to? Because we are looking at infra, we have to look towards long-term finance. So whether these people have capability to access long-term finance, then the answer is yes, because insurance companies have access to it, pension funds have access to it. So those are the people who can invest, stay in that sector. So anything related to the change from the first stakeholders to the second is going to be innovative. Did we try anything? Yes, I think very recently we got that pension funds can also invest in infra to an X amount of tune. So the tune has to increase. Whether they can invest in AAA rated bonds, whether they can invest in AA rated bonds. So this is one more opening up of avenue that, okay, whether the rating could be compromised so that, or the rating could be brought down, instead of using the word compromise, I should say the right rating, that today they want to be in a more secured kind of thing, whether they can go towards a bit less secured, saying from AAA can I come down to AA, from AA can I go to B, those kind of things. If those kind of things are done, obviously these people can invest their available surplus. So I think these are innovations that we have to look to. And third, at least from last 10 years I am hearing about the municipal bonds. I think it never worked out. We are still trying to bring in that. So once these things come out, so the people who are sitting on huge finances, the people who are having access to long-term finances can be party to it. The whole reason why we were keeping them away was that whether they are matured enough to take the exposure directly. So the commercial banks have proved that, yes. Budgetary allocations, yes, they can do. So promoters who have actually put in a lot of efforts or taken that risk to be in that, so they have to be unleashed out. They have to be unleashed out so that they can opt for again deploying that available money in the next infrastructure phase. So we need to look at avenues like this.
Mr. Nadar, in this case of financing, the new ways of financing, there are so many examples which we can take from abroad. But why are they not coming to India? What is the big issue? Is it because of the policies of the government? Is it that we need to change laws? What's the reason for various new products which are available to the Western market and the developed markets which are not coming to India? Many of the developers often say that when they go abroad, they find so many new ways of doing it. Even China is so ahead in terms of finding new ways of financing, which we don't.
See, your answer is right. I mean, your question is correct. I can tell you that in terms of the maturity of the infra market that we have, we are way behind any of the developed economies. We have, maturing from the underdeveloped to the developing economy. Today, as an economy, as a sector, whether infra space are good enough to fund it on its own. Now, funded means whether it has enough amount of capability to recover the capital invested. That is number one. So, when we look at the kind of infra products that we are doing today, the kind of infrastructure that development that we are doing. Now, whether it is user-free trend, whether it is most based on the user fee, whether it is toll collections, whether it is based on the water supply, whether you are able to recover from people. So, what are the user charges? That is number one. So, what are the ways it is going to be funded? Second option is, in terms of long term, whether there is any government collections which is going to be backed up for it. So, individually, whether it is capable of standing as a standalone project. That is number one.
Okay.
Second is, in terms of people, see, if today we see that at least we have balance sheets of developers who can show 10 years of last 10 years of performance in infrastructure segment, which has not been earlier. There has been entrants who have just come in 3 years of balance sheet. You name it GVK, you name it GMR, you name it LND. If you look at their balance sheet as a developer, not as a contractor, as a developer, their balance sheet will not be older than 15 years now. So, in terms of maturity, sustainability and their survival in this particular sector, for any investor to come in and look at them was also lagging. So now is the time when that is happening. Now is the time when we are also trying to bring in some innovative products in the market, where as a standalone balance sheet can go, raise money, look at the ECBs, look at the FDI flows. Now it has come, which was very difficult maybe a couple of years back. That is number one. Secondly, how good it is government backed. Now, any kind of financing, whenever we look at a different structure, when we look at any offshore person to come and invest in our industry, invest in our sector, invest in our developer, what kind of security do we give them? Whether whether government is backing up for such kind of projects, because any investor coming in is going to look at what? His returns, his security. Now, currently, the ECB has been extended with some additional security which could be made now, which was not the case earlier. Okay. So now these are things which has to be done. So in terms of regulatory wise, we have to move some steps. In terms of maturity wise, our developers have to mature, which currently we have crossed that 10 years, as I rightly said, 10 years have crossed. Now today also, if you see the kind of projects that we executed is power and road. You name the infra, it will be again power and road, and the composition will be almost 80% by power and road. These are the only two sectors which has come. And in terms of road, yes, we have gone ahead, seen, developed, started collecting. Whereas in terms of power, we have not seen collections now. Okay, it is just in the process. Maybe we have done 2 or 3 years of operations, not much. So these are 2-3 things which has to come, because finally it's a derivative. Finally, any investor will come in and invest in a particular product when he sees it developed and operated. Right? So the financing options of operation structure is currently getting developed in our country. So this is the right time, I should say, maybe 2013, 14, 15, you will see a lot of changes coming in. Thirdly, in terms of policy, now I always believe that when we look around, when we look at our neighbors and think that, okay, how good are we in terms of infrastructure financing options available? See, we have various other projects which are performing better. In terms of retail, it is performing better. In terms of other industries, it is performing better. So when you compare a short-term gain receiving, or the short-term industry performing better vis-a-vis a long-term which is not proved, okay, the movement of finances will also be more concentrated towards those kind of industries. More people-oriented industries, right? So when you look at capital markets, look at the capital markets. The amount of debt that we have in capital markets, are we good enough? None of the infra companies are performing very good in capital markets, right? So these are all very clear indicators that people's confidence still on the long-term based project, and in terms of the confidence that they have in the developers are still less, which is getting created. I should say it is getting created because it was never there. It is less now, so maybe it will grow better. Okay,
sure.
So those are also options which are coming up. Okay. Maybe these are the reasons where I feel that over a period of time we will have so many opportunities.
Lokanathan, I am tempted to ask you about the ideas that you have in terms of innovative financing, but then there are two issues which you have raised right now. One is about which other sectors do you think will be attractive for foreign investors in terms of infrastructure? When you say right now it's all about roads and power and a little bit of airports also, but then which are the other sectors where India can be attractive?
See, I think the next sector where India has to be attractive is going to be water. Definitely it has to be water. But
in terms of both
water supply, in terms of sourcing as well as distribution. Because see, the trend that as we were just discussing earlier, that when we call urban infrastructure means we are not going to avoid real estate out of it. When we say there is a real estate development, then we need water supply there. That means 24 hours water supply. There are a huge amount of cities who has critical deficiency of water supply. So one is the sourcing and second is distribution. So both the sectors are going to find a huge amount of response in Indian infra as third. Then water related, when you say water supply and water related means that is good water as well as the bad water. That means you need to also look at the drainage, sewerage kind of thing, which currently it's a topic of Ministry of Rural Development, and they are only working about it, and rural and urban development, which they are looking at it. But in terms of private participation, yes, these are the sectors which will open up a lot.
There are lots of developers who also say that there should be a separate ministry for infrastructure alone, instead of having a ministry for railways alone, which now it's becoming almost passing. Instead of that, to have a ministry on infrastructure alone, where all these issues regarding water supply as well as drainage, power, and even housing should be included. You have the same opinion on that?
I will differ slightly on this because see, we have, when we say we have a Ministry of Railways alone, when we say for infrastructure, we have to differentiate between one is what kind of infra. There is a transportation infrastructure. Okay, because the problems are different for different infrastructure. When you look at urban infrastructure, it is much different because it is more related to living, more related to the the style of living of people, maybe the health of people. So all those things which will come under that in urban infrastructure. Whereas when we look towards the transportation infrastructure, you will see that whether the roads are fine, whether the logistics industries are performing fine, and when we relate towards the export infrastructure, that's where the port and other things come into picture. So, though it is falling under the same ambit, but the problems are much different. When you are looking at the economic issues which is happening currently, okay, the port per se, if you look at the sector, it's a fantastic sector, but it is absolutely dependent upon the exports. Whether we are able to do good exports, whether the export market is still receptive about our products. So however good you are in terms of constructing and operating a port doesn't make any sense till the time you are not able to run the vessels. So these are issues which we feel. So if you are trying to bring everything under one umbrella, it will be still a difficult issue because each and everything needs independent assessment, independent requirement. You need to look at it independently.
But Mr. Nadar, for the sake of attracting foreign investments in infrastructure, will that not be a good idea? The same can be applied to housing also. Housing also depends hugely on IT sector performing well, or any are the salaries going up, are the jobs secure. Otherwise, the housing fails. So,
see, I'll tell you, the housing has a correlation with population.
Correct. Yeah.
The first correlation is population, which is absolutely not dependent upon any of the other industries performing.
Correct.
Okay, the demand has been per se. If you look at we are part of DHFL also, so how the housing per se chart we look at differently, saying okay, every married person also needs a separate house. That can also be a demand driver for it. So whether we are going to link it to industry, then I say like housing is a separate board. It is it has to be looked at in a different form.
Okay.
Because the demand driver itself is different. Whereas when you look at the logistic industry, it is, I should say logistic infrastructure. It is dependent upon the industry, from where the goods are moving from one region to another. Second, when you look at port, you are going to look at, okay, how the economy is performing, whether I need to have my port on the west coast or whether I need to have it on the east coast. Okay, which side trade is doing better, which side my my exports are happening. So these are all these all becomes a factor of assessment.
True.
So as I said, these are critical areas where we need to look at.
Okay.
So clubbing them all together, okay, housing is also a demand run, IT run. It's more population run than the IT run. IT is obviously an addition to it. See, because of IT, if you look at it in terms of the purchases of house, the age group has come down from 35 to 25. 25 to 28 are very recent people who go for home loans, who go for housing. The average has come down. Yes, that is number one.
Absolutely.
Okay. So when you look at the housing demand, the average has come down. Whereas in terms of otherwise, even till now you project the housing based on the population demand, then the average age group who is going. Okay. Average age group is a determining factor, but that is not the only factor today.
Sure. Now, Mr. Nadar, I was just talking about this because the real estate boom is always related to the IT boom. Whenever IT fails, the real estate also comes down. Again, related to what you were saying, one more small issue is that foreign investors coming into India, shouldn't they be used to emerging economies like us where things are not perfect? When you say that things are not perfect here, because we don't have a track record of either the infrastructure or of financing. Shouldn't the foreign investors be used to that kind of a situation?
No, they are. They are looking very positively. I should not say they are not looking positively. Rather, they looked at us very positively in 2003, 2004, 5. That is the reason they came in, and great investments were made, and infra was all looking very boom during 6, 7. But the decline which has come and the return, the way we have performed, is also a setback which is which is there in our record that okay, we have not performed well. That is number one. Second, the shining India concept is somehow not absorbed. I am just being critical about things what is not happening, because even we go to people and say okay, the infrastructure performance is there, but this is a critical thing which we see that it is happening, that India as a story, because see, there are other developing economies also competing with us. You take it as Nigeria, you take it as other economies which are South Africa, all these people are again competing economies with us. We have reached, I am not comparing economy to economy because these are underdeveloped economies. They are yet to come to a stage of developing stage. But in terms of developing, we have to show far more good performances. The confidence is still there. The foreign investors are still looking very positive. And that is the reason, the change has happened. If you look towards the investments, the trend, see, the family investments to the multilateral agencies investing in India has actually grown. Okay. So if you really look at it, ADB looking at a country like India, IFC looking at a country like India, these have actually grown. The investment size has grown. Over the last 2 years, if you go to the track record, their investments in the country has been good. So as an institution, yes, it is still very good country to invest. That is number one. And even in terms of the infra space, see, we are always been growing. It is not that we have performed or we have not grown. In terms of budgetary allocations, yes, infra has grown. Okay. In terms of the amount that has been spent, we have grown. The fact is, in terms of returns, in terms of operations, see, every infra goes through the phase of one, developing infrastructure, and then there is an operating infrastructure. All the developed infra finally goes into a bucket of operating. Okay, this is where we have failed as an infrastructure of performance.
But don't you think that Land Acquisition Act and those kind of laws also makes it questionable on developing infrastructure?
Yeah, see, that's what I said. So that is one set of bucket. The second set of bucket is the infra that we announce. Okay, every time we want to announce big infra. Okay. Now after announcing, what happens? After announcing, we have n number of issues. Like let us take an example of the special economic zones. Okay. Now, for a special economic zone, there were a lot of tax incentives. Most of them have been withdrawn. So now, none of the SEZs, at least I don't find any news article coming for special economic zone, which used to happen maybe 3-4 years back. That is number one. Number two, if you look at all the power projects, most of them have environmental issues or most of them have land issues. Okay. Now, having this land acquisitions bills and otherwise, it's a controversial discussions. Obviously, even that whether it is good or bad, it is bad to the extent of having too many people on the deciding front, because we need to look at too many people when it comes to land acquisitions. If you have to make them partners on the project, then it absolutely delays. Secondly, the compensation. The compensations have been very high in terms of what has been proposed and what is there now.
True.
So in terms of compensation, it has also gone high. So to that extent, the project cost increases. But per se, instead of compensation, I should say the amount of delay that is causing to the project, that is number one. That's very high. And because of the ambiguity there, whether it is 80% approvals are in place or 90% approvals are in place, whether the project is going to come or no. Now, these kind of things have also made investors, think or doubt about the project, whether it is going to come up. Then environmental concern has always been there, I mean, for all the infrastructure projects. So environmental concerns are
so
also
don't you
a toughening
think,
issue.
Mr. Nadar, the cost of the infrastructure construction itself would go up considerably because of the risks involved in projects, especially to do with land acquisition?
See, finance is a matter of one, liquidity, and second is risk. The more the riskier the project, the costlier is the finance. Right? So I won't be able to get any finance which is at low cost. So the low cost finance means the foreign investments looking at such kind of projects comes down, or institutions like an insurance company or a pension fund looking at this kind of companies come down. So the cost of finance absolutely rises because of all these kind of risks. So that kind of comfort is not there. And before announcing a project or before we get the project on ground, I think these are things which has to be addressed, and which we as infra developers as well as government, we have to look at, and we need to address these issues.
And do you think that the developers will, the track record of the developers will not really be matter that the investors will take into consideration, because land acquisition is such an issue that even a good developer might face problems?
See, land acquisition per se is a problematic area. Because every state has a different rule, that is number one, for land, because it's a state subject. And being a state subject, you have different categories of land. Look at Karnataka, you will find various sections of land. Look at Maharashtra, you have class 1, class 2, class 3 land, Maharvatan, Patalvatan land. If you go to south, a company can purchase land. If you come to Bombay or Maharashtra, a company cannot purchase land. So per se, there are a lot of issues in land.
True.
And all the big developers, even reputed developers, are facing difficulties where they have to go to the ground level and find. So state has to put an institution, though all the state industries development corporations are assisting, or the state government is still helping out some of the big projects, but it is a challenge.
Okay. Mr. Nadar, now let's come to the point of the innovative schemes that companies like you can bring in infrastructure development, and which includes, I would say, even real estate. Large township projects or SEZs, those kind of projects. What kind of innovations do you, companies like you, can bring about?
See, we are part of the asset management company. We are Arthveda, fund management company. So we look at the alternate investment funds. So these are the second avenues which are available for infrastructure. So like Arthveda Anu, the fund that I had. Arthveda Anu is a micro infrastructure project fund. It is more to fund towards the subcontractors and the project executor companies. Okay. Now what happens is, we have seen that most of the contractors or project executors who are on ground, the organized sector of funding is not available. Now the project finance kind of funding is never available for any contractor. The kind of funding that they have is more a working capital loan, and more like the one they get it on their balance sheets. Okay. So we are trying to bring some innovations there. We are trying to bring a fund. Finally, you need to, as I said earlier, we need to find a different investor other than the existing one. So we are trying to find investors, or from the investments available from financial institutions and insurance companies, which can park their funds into a SEBI approved alternate investment funds like ours.
Okay.
We are category 2, and now we are getting converted to category 1.
Okay.
So kind of funds which will finally go to the same sector. So it is one more change of hand which is possible, and it has to be looked at very positively by the industry also. So so this is what we are trying. In infra, we are trying only with this. We are also having Arthveda Anu offshore, wherein we are going to launch a fund offshore and get that money to India through debt route, through NBFC, and we are looking positively towards it, which is again going to go for the infrastructure. So these are the only two routes currently we have. We are not looking at any other funding for townships and all.
overseas funds financing through debt route has become suddenly quite fashionable, isn't it, in India?
India, yes. I mean, if you really look at the new innovation, you find a lot of listed entities operating through the overseas money and getting listed in our exchanges and goes to real estate. So in real estate, yes, we have seen a lot of things happening by this offshore route, on the debt route. That's there.
Okay. And what about the takeout finance? Do you think that it's not getting its due? What do you think are the issues related to takeout financing not coming up as it is expected?
See, refinancing and takeout financing, the difference is, one is, refinancing, or rather, let me put you to a table that what is currently available. Currently what happens is, there is a infra project. Suppose there is a construction phase of 3 years and an operating phase of 30 years. Yeah. Then you know that the risk associated for the first 3 years is much higher. Okay. Then the financer who comes in during that tenure is always at a higher cost. It's a risk reward function.
Yes, yes.
It's always at a higher cost.
Yes.
Whereas the time the commercial operation date or the COD date is struck and maybe within a year of operations, it's always reset. The interest rate is reset. So you go to the same banker, you say, boss, you offset or you change my interest rates. So here you find that there is the same things available. Like one banker is there who is already given a loan book or who has given loan to your company, and you have offset it.
Okay.
In terms of takeout finance, what happens is, you know that okay, the track record of first 3 years is done. Okay. During the operations, you have to give it to somebody else. Okay. But that person has to be earlier identified. So there is a tripartite arrangement which has to be done. It has to be approved by an institutions. In terms of the development that has to happen, one is foreseeing of the operations. You are already identifying the third party who has to take out and operate.
Correct.
Okay.
Correct.
Now, which as infra as a sector, okay, now this has been very successful in other forms, like maybe the cards, home loans. I mean, a lot of other things. You know that okay, the refinancings are already successfully operating. But in case of infra projects, one, due to the size, okay, the bucket having less number of projects, whereas the size being huge, that is number 2.
And the term being long.
The term being long, that is number 3. At the same time, the risk of the project, the risk of the project to be assessed by the party who is going to come in. It's also high, because you need to identify the person right in on the first day and sign a tripartite. So these are some practical concerns which are there.
But do you think actually the risks can be identified for such a long period? Is it feasible to do that even in developed world?
See, in terms of risk being identified is not difficult. Let me say, other than the operation risk, other than the demand risk, for infra, what happens? That's the reason I said, you need to classify infra into different buckets. If you say, okay, roads, you know that, okay, it is only on a traffic basis that you are going to look at the risk. Okay, whereas if I have to look at ports, then this kind of things will be very difficult for me to do, because it is absolutely economy run. Okay.
Exactly.
Whereas if I have to look toward water supply, it will be always successful. Why not? Because you know that the person who is connected by water, the demand will always be same. So you need to identify all those things. You need to separate out infrastructure and say, okay, boss, water infrastructure is running fine, the road infrastructure is running fine, railways are going to run fine. So let us see those kind of things and apply there. IFCL has brought that scheme, right? It's already there. Yeah, IFCL has already done that. Okay, takeout financing they are going to do. Rather, they accumulated some more funds with IDFCs and all. So I think that will set some tune to it, and maybe 1 or 2 projects going through that will help out.
But then do you blame the consultants for all these projects which actually go haywire after a few years? Because the consultants come up with grand plans and the demand projections, but then the demand projects, for instance, roads. Now, the number of vehicles that would be going through the toll booth is sometimes 10 times more than what is actually happening. So, do you actually think there is a lot of immaturity in the consultancy business also?
See, I think we need to look at this slightly different, slightly in a different footage.
Okay.
One is obviously, who is announcing the project. As you rightly said for roads, yes, we see that, okay, the kind of projections which were given during the bidding times and the kind of projections that we are seeing today.
The biggest problem today for PPPs being a failure is this,
See, yeah, that's true. The demand which gets projected during the RFP stage, during the bidding stage, and finally during the operation stage is much different. Okay, for bankability, I think, we need to, I cannot pinpoint and say that, okay, this is a consultant's problems alone. because it's again trial and error based. So maybe the growth that is projected, it's projected at a higher number. It's always projected based on the actuals. Today you calculate and say, okay, it grows at 5%, it grows at 10%. Okay, we need to ensure that it is not growing more than what the economy is growing. Okay, the figure should not be that high. That is number one. And number two, see, the problem with our estimations has always been that we always take the fullest form of estimations. Okay. So like for example, there is already an existing road, you know that okay, there is a road, so this will be X amount of traffic. The time you are going to branch out with some other road, it will never address the similar kind of things because it will be different. Okay. So there I think there are some mistakes. I mean I cannot pinpoint and say okay, these are the people who have done mistakes or these are the consultants who have done mistakes. But yes, there needs to be a lot of improvement.
But
there needs to be.
How do they do it in the developed world? How is that they don't get into this kind of a messy situation?
They have also gone through the same phases. I mean, it is not that they have not gone through this kind of mess. Rather, when you say developed world, let me tell you the projects or the estimations of the developed worlds are of very smaller, length and very smaller sizes than what we are looking at. India is very vast, and the kind of projects that we announce and the kind of because every road has to pass through a village. It is not that it is going to be a small case. Our estimations to a city has been much more successful than towards the rural area. This is where we have failed. Where the cycles as well as the monsoons and things has to be also incorporated. Where we have failed per se. So in terms of the standards or I think we need to bring some more methods, but we are technically most of them are using technical ways of estimations only. So only in terms of when it comes to growth projections, where people have to be more realistic than projecting at a very double digit number.